Okay, so today is an online tutorial and we will look at the Unit 2 tutorial questions. In total, there are 6 tutorial questions for this unit and you have done the 3 and also you have submitted to me, right? Okay, and now we look at the first one. For this one, it's about Mr. Tam. He owns 4 property in the following place. In total, and you will find that he have 4 properties and but one is in Canada. And the question is asking about the property tax liability of Mr. Tam and also advise the number of assessment that he will receive. By looking at that, you will find that uh, the one in Canada, this one, because that is in Canada, and basically it won't be uh, subject to Hong Kong property tax because the physical location is in Canada. Okay, that's why what the other 3 will calculate the property tax liabilities. Okay, because of that, we can construct a table to work out the amount, but you will find that for each tax assessment should be separately to calculate each of the properties, and that's why for this one is convenience for calculation only. In the reality, and that should be separated into 3 tax assessment. That will be one on Tai Sing, one on City one on Wampo Garden. Okay, and then by looking at the information given, and each of them will be have rental income. Okay, that is the rental income. Then the rate is being paid by the owner. That's why he can claim the deductions, and we can work out the accessible value. And then after that, no other deductions. In general, there is a few only. Okay, what can the owner deduct is the 2 things that I have emphasized on, that is the rate paid by the owner and also the 20% statutory deduction. Okay, that's why we will deduct 20% statutory deductions. And then we will work out the net accessible value, and we will multiply the standard rate 15%. Okay, then we can work out each of the property tax liabilities, and then we can work out the total. Finally, we can work out the total amount is $61,440. And for the second part, we can answer Mr. Tam will receive 3 tax assessment separate. Okay, should not be in one, and 3 separate assessment. And the one that is in Canada, because that is not physically located in Hong Kong, and that will not be subject to Hong Kong property tax. Okay, then second questions. Second question is about another person, Mr. Guan, own 3 property A, C, D on the same floor in Hong Kong mansion of Tai Sing. Okay, and by looking at that, A is his residential home, and that's why it is for own use, and doesn't receive any rental income for flat A. But for flat C and D, being let out to Mr. Tam and ABC Limited, and that's why, according to the question, it asks you about how many property tax assessment will Mr. Guan receive. Simple, and that will be 2 in total. Okay, that's why you can further to discuss, and A, because that is for residential purpose and not being rent out, and no rental income, that won't be subject to property tax. And C and D, and that is situation in Hong Kong and also receive a rental income, that's why it will be subject to property tax. And finally, you can say that Mr. Guang will receive 2 assessment only. Okay, question 3. Question 3. Belgo Limited's home affect in a commercial building in Central and receive rent in the total of 880,000 and pay rate 120,000 for 12-month accounting year end on 31 December 2018. The property left vacant after the year end and compute the property tax liability for that year 2018-19 if the Bago Limited did not claim exempt from the property tax relief. Okay, that's why we can work out the property tax because basically there is a company, right, and a corporation own a property and rent it out. Most likely this company was subject to profit tax. But now assume he have not came for any exemption for that. That's why he will also receive a property tax assessment. Okay, now look at the calculation. Okay, for this company, and you receive in total 9 months rental income, and in 18 and 19 this year of assessment. By looking at that, the concerning period should be from 1st of April up to 31st December, and that's why the total amount of the rental income we need to apportion, and that's why 9/12 times 880,000, and that's why the rental income for this year of assessment is 660,000. And then the rate is being paid by the owner, and also the total rate amount is 90,000, 120,000. We also need to apportion it because that is for 4 quarters, not just 3 quarter only. That's why 90,000. Okay, then we can work out the 100% statutory deductions and net accessible value. Finally, multiply the standard rate, 15%. Okay, second part will be related to another part. That is another concept that is about the if in case this company also received and also paid the concerning liability in related to profit tax, and what should the company do? And that's why so simple. You can advise Bago Limited to come for a relief or set off. Okay, and that's why we can work it out. Okay, and because of that, you will find that Bago Limited can apply a set off according to Section 25. Okay, and that's why he can ask for a set off, because the property tax amount is 68,400. That is much more than the profit tax, and that's why he can claim for a set off. And because of that, the excess amount 31,510 will be refunded to Bago Limited. Okay, then question 4. The question 4, all of you have done on this question, right? Okay, I assume you are familiar with this. Okay, by looking at question 4, Mrs. Lam owned a flat in City Garden and rented it out to Mr. Marsden and his family under the following terms. It is a lease period, 18 months, starting from 1st of October 2018. And the monthly rent is 680,000 as 6,800, payable at the beginning of every month. She need to pay initial premium 54,000. Okay, that's why for this premium can spread over, and according to the Inland Revenue Ordinance, and that can be spread over whichever is the shorter. That means the lease period or the 3-year, the maximum. Okay, because the lease period is 18 months, that's why you can spread it over for 18 months. Okay, that's why the rental deposit payable is amount is 13,600, and that is refundable upon the completion of the lease. Rate 2,000 per quarter payable by the tenant. Now this is paid by the tenant. That's why the owner cannot claim a deduction on the rate. Management fee are being paid by the tenant, and that is not considered Okay, because the tenant enjoy the management service, and she paid the management fee, settle her liabilities, nothing related to the owner. Okay, that's why we can book out the property tax liability over the lease period according to the rule. Okay, that's why for the 2018 and 19 this year, and that will be start from um, 1st of October 2018 and up to the next year 31st March. Okay, that's why in total there is just 6 months. 6 times 6,800, the rental income is 40,800. Okay, and then we can spread over the premium according to the rule, and that will be based on the shorter one, right? The lease period. And that's why 6 over 18 times 54,000. That's why in this year we will take into account for 18,000. Add them up is the total considerations. And then about the statutory deduction and 20%, and then we will deduct this, and we will work out the net accessible value. Then we'll multiply the standard rate 15%. The tax payable amount will be 7,056 in this year. Then the second year. The second year that will be related to a whole year, right? And that will be from 1st of April to next year 31st March, and that's why 6,800 times 12, that will be 81,600, and that will be the remaining portion of the premium, and that will be 36,000. Less 20% statutory deductions, that will be 23,520. And finally, we will multiply the standard rate, and the tax liability in this year will be 14,112. Okay, then now we look at question 5. Okay, question 5. And mention about those information same as question 4 from 1st of February 2019 onward. Mr. Marsden failed to pay the rent and left the property on 31 March 2019. And that's why in this year, it seems that there are 2 months rent outstanding, right? But after searching Mr. Marsden for a few months, Mrs. Lam still could not find Mr. Marsden. Okay, and also the assessor agreed the outstanding rent will be treated as irrecoverable rent on that year, July 2019. Okay, that's why that day, on that day, the irrecoverable debt can be included in the year of assessment. And subsequently, and you will find that Mr. Marsden approached Mrs. Lam, agreed that the total, the rental deposit paid at the start of the list will be used to offset the outstanding rent. Because of that, you will find that there is no outstanding rent anymore, because the deposit are used to set it off and cover those rent, outstanding rent, and that's why there is no bad debt, no irrecoverable rent. Okay, and that was being reached in September 2020. Now, be careful, and that is in another year, right? And that is in another year of assessment. And because of that, you will find that in 2019 and 20, in this year of assessment, we still have irrecoverable rent until next year, it being recovered only. Okay. And then for the 1st of October 2019, Mrs. Lam rent the property out again at a monthly rent of 7,500. The new tenant was still responsible to pay the rate and the management fee. And the question asks you to work out 2 years of assessment, 2018-19, 19-20. Okay, that's why now we will start to compute the tax liabilities. for Mrs. Lam. Okay, for the first year, 2018 and 19, this year, in total, that because the rent is start on 1st of October, right, up to the next year, 31st March. And that's why in total just 6 months only. And then the premium, we can work out is 6/18, and then we can work out the net accessible value, and tax as 15%. That will be still the same, right? 7,056. But for the second year, this year, because Mr. Marsden left the property, and also in this year, the assessor agree that Mrs. Lam can include the irrecoverable rent. Okay, that's why in this year still we can work out the rent up to the concerning day agreed by the assessor is still 6 months, right? And then premium, no matter how, for the whole amount will be included. It won't be a portion also. Okay, then in this year, because there is 2 months irrecoverable rent, that's why Mrs. Lam can deduct this 2 month irrecoverable rent. And then after that, 20% statutory deductions, finally multiply 20%, 15% tax rate, and that will be the tax payable amount, 8,088. Now be careful about the settlement by the deposit. That will be on next year, 2020 and 21. And then for this year assessment, then Mrs. Lam should include one more income, okay, that is the recoverable rent, okay. But in this year, we will deduct the recoverable rent first, okay. That's why when you read the question, you should be careful about the timing of those events happen. Okay, the last questions. Okay, this questions about Mr. Goh. Migrated to Canada several years ago. He owned residential properties and office in Hong Kong. And the following information provide the property list transaction. Okay, by looking at that, there is a list period, and then the monthly rent, and also the premium, and that is paid on 30 June 2017. And also there is a rent deposit, and this is refundable, okay, upon the termination of the lease, and he will return the property to, if he can return the property to Mr. Goh in a good condition. That's why there is a refundable rent deposit. And then the rate is being paid by the owner, Mr. Goh, per quarter is 2,500. Okay, management fee, basically that can be ignored, because that is not allowed to deduct by no matter that is being paid by Mr. Goh or not. Mortgage interest, okay, and also I have already mentioned that cannot be deducted under the property tax, although that is 35,000 per month being paid by Mr. Goh. And number 8, renovation, and that is about the redecoration expenses being incurred by Mr. Goh. But no matter how, you will find that there is no actual expenses deduction, and that's why you can also ignore this one. And number 9, property agents free, half of the monthly rent, and that is an expenses also. Mr. Goh need to pay this agency fee to the agent, and that's why there is no actual expenses deduction. This one can also be ignored. Okay, because of that, you will find that the question mentioned about Mr. Khan is the tenant unable to pay the rent to Mr. Goh starting from 1st of March 2018. And also you will find that in next year, 1st of May 2018, both of the parties reached a new agreement. That is, the monthly rent reduced to 15,000 only, and starting from 1st of May 2018. And rent deposit $4,000 will be used to fully settle the outstanding rent. Okay, because of that, you will find that, first of all, it doesn't have the assessor approval, and you cannot claim any irrecoverable rent, right? And secondly, they have also reached a settlement and used the concerning house deposit to cover it, and that's why there is no irrecoverable rent actually. Okay, and then other terms and conditions of the list remain unchanged. That will be the questions. And other than that, you also have a property B. For property B is an office and was vacant during the period from 1st of March to another year, 31st December 2018, and starting from 1st of January 2019, the property was let to Boss Limited at a monthly rate of 30,000. Okay, rate 6,100 per quarter, and monthly management fee 2,800 was payable by Mr. Go. Okay, for this one you will find that it's being paid by Mr. Go, and the assessor accept the rent of 85,000 owned by the previous tenant for the period 1st of December 2017 to 28 February 2018 was irrecoverable when the tenant was declared bankruptcy on 30 June 2018. Okay, because of that, that you should be careful about this amount, and that will be occur in which year, and also in which year that Mr. Go can claim for irrecoverable rent. Okay. Also, the question have something asked you to discuss is Mr. Go think that he don't have any tax reporting in Hong Kong, and he believed that he was not subject to Hong Kong tax. He have two reasons. First, he think that he is no longer a resident in Hong Kong. Second, all the rental are deposited into the bank account in Canada. He take these two arguments and saying that he no need to pay any tax, property tax in Hong Kong. You need to give him an advice and to explain to him. Okay, that's why the question asks you to give advice and explain. And you should refer to the ordinance and to explain clearly to Mr. Go about the responsibility and the liability and the obligation of a property owner. And you should call the concerning section also. Okay. And then part B is the property tax computation, but just work for this year only. Okay, 18 and 19. Okay, that's why you should be careful. And also the question asks you to give explanation on two items, 1, 2, now item 3 and 7. Okay, now we look at the answer. Okay, first part is to explain to Mr. Go about the tax liability and obligation of him. And I used to call this section 5.1 of the Inland Revenue Ordinance. You mentioned about all the property tax is levied on the owner of the land or building or land and building situated in Hong Kong. Okay, and that's why that is the key thing, situated in Hong Kong, about the properties. And also the definition of owner. You should mention about that does not differentiate Hong Kong resident from non-Hong Kong resident. There is no difference. Okay, it doesn't differentiate. And the owner charged to property tax, even he or she only connected with Hong Kong, is focused on the land and the building physical location, and also whether the concerning property are being lent out and receive rental income. And that's why what he mentioned about the pace of receipt, the rental income is irrelevant. Okay, you should give him an advice that he should pay, and also he asks subject to Hong Kong the property tax. Okay, and you should discuss all. Don't skip it. Okay, or just ignore it. You should focus on his argument to discuss. Okay, don't just mention section 5 and then you should pay property tax because property is located in Hong Kong. Finish. Okay, you should discuss detailedly and focus on what he argument to give advice. And then part B will be the calculation related to two properties. Okay, for the first one, property A, and by looking at the year 2018 and 19, in this year, basically there is 1 month is the old rent amount is 20,000, right? And then the other 11 months they reach an agreement, reduce the rent to 15,000. That's why that will be 15,000 times 11, and the total one will be 185,000 in total. And for the premium, no difference. That's why you apportion according to the lease period, right? Okay, that's why half of the amount, 50,000. And also the rate is paid by the owner. That's why 4 quarters and time 25,000. That will be 10,000. And then we can work out the 20% statutory deductions, and then net accessible value, and that will be 180,000 times the standard rate, and the final tax liability for property A is 27,000. Then property B, for this one, and you will find that is being rented out for 3 months only. Okay, 3 months only. And then the amount of the rental income is 90,000. But in this year, because the assessor agree the previous tenant is a irrecoverable rent, and the amount is 85,000. Okay, that's why that will be allowed to deduct in this year. And then what the remaining amount is just 5,000, right? Accessible value. And but for this year, Mr. Goh also paid the rate, but the rate amount is 6,500, which is less than the accessible value, right? Okay, that's why you should not write 6,500. What Mr. Goh can claim is just 5,000 only. You write 5,000, restricted to the considerations. Okay, finally, the net accessible value should be nil. Don't write negative figures. Don't write 0, whatever. Should be nil. Okay, and also the tax liability also nil. That will be the appropriate wording you should use. Okay, and also don't provide any negative figures. Don't deduct the rate is 6,500. You got 1,500 negative figures. That is wrong. Okay, then we will explain on the 3 items. Okay, and then you can code the concerning section, and that is about the section 5B4. Any lump sum premium paid in respect of the lease existing 1 year may be spread on an equal monthly base over the lease period, or 3-year period commencing at the starting date, whichever is the shorter. Okay, that will be the tax treatment on the concerning premium, and you should give a clear explanation on that. Item 7 is about the mortgage interest payment, and for this one you will find that because there is no actual expenses deductions, and also you should mention about except under the personal assessment, this mortgage loan interest may be allowed to deduct, but under property tax it is not allowed to deduct. You should mention all this when you answer this part, okay? Because that is under property tax, which is not under personal assessment. That's why mortgage loan interest is not allowed to deduct under property tax. And that will be the way to answer this kind of the questions. Okay, I assume you all understand, and if you have any question, and maybe you can go through those things and then ask me through email or. And next week, we will continue. If in case we will continue on the online teaching, then we will continue on Unit 3. And you should also submit your individual assignment on time in a soft copy and send to the canvas. Okay, okay, that's all for today. Okay, see you. Bye.